Hello, trading is closed on January 25th, 2021. We always start with our disclaimer. It's my trading plan for tomorrow, January 26, 2021. Please remember, if I'm making a call based on something other than MEJT, don't expect the same level of accuracy. And of course, my call could be completely wrong, so trade at your own risk. Email is mejt.trades@gmail.com. We said that unless we gapped up and promptly took out Friday's high, we should see lower prices, but I said there were a number of factors leading me to believe we would get such a gap up, and that's what we did. This is a pattern with the early low, and tomorrow has the early high. Early on, MEJT said ultimately lower price it would print. Doesn't have to be as low as this, but it did work. It was an argument against chasing this up move here. Later on, it said higher price it would print. Didn't call the next move, but when we dropped here, it said it wasn't the real thing, and we would retrace and get higher prices, and we got that too. Nothing from the system for tomorrow. We're making a series of diamond on stilts. Here's your stilt. Here's an obvious diamond. Here's your stilt. Here's the origin of the left stilt. It's a support level. Usually, not always, the first challenge of the origin of the left stilt holds. If we challenge it again tomorrow, it still counts as the first test. But if a few days pass and we challenge this again, it tends to fall like a stone. So once we reverse, if we reverse, these things here are going to have the potential to fall like a house of cards. Doesn't mean the rally's over yet. Same thing goes for this pattern. We still have balance, wave balance at 39.20. But once a rising wedge fails, if in fact that's what this is, we don't know that yet. If that's what it is, has a tendency to fall all the way to the base, down into 3200s. We rallied all day long. Let me show you this one. We gapped up, hit a higher high, despite rallying all day, couldn't close over either of these highs. It's a negative pattern. Unless we gap and take these highs out early tomorrow, we should see lower prices. There's also a Fibonacci argument for us ending the rally right where we did today. But of course, as always, that's not the only way to count it. It's possible to call this a wall into the close. Many times it's followed by gapping down when the market reopens, often under the origin of the wall. All this negative stuff goes away if we take this high out early. If you're a bull, that's what we have to do. Norm Winsky's back tomorrow. Maybe he'll have some more good things to tell us. Tomorrow's pattern has a really high. Doesn't mean you won't gap down. Typically, it's a rally day with a final hour high, but failure is a straight line drop. We gapped up at a higher high, closed under the early highs. Unless we gap and promptly overtake today's high, look for lower prices. That doesn't require or preclude closing down. This is a breadth indicator, bullish percentage of stocks on the S&P 500 and the put-call ratio. Each of them dropped today. It means the public is buying more calls as the market breadth deteriorates. Doesn't mean the rally's over yet. I'd still like to see 39.20. I don't always get what I want. And this was not a good day today, technically. Tomorrow has the early high. If we don't take this out early, we should see lower prices, but the day has a strong tendency to finish with a positive kick. So even if we do drop, if it isn't a collapse, we certainly have the potential to recover. And that's today's call.